All right, so I'm sharing now. What happens during a conversion? Okay, what happens during a conversion from another system to SAP? So in the transactional system where the acquiring company, okay, there's always an acquiring company and acquired company, right? Acquiring company is the big fish. Acquired company is a small fish which is swallowed by the bigger company. Okay, in the acquired company, let's say they use Oracle system. Here they use SAP system. So they have a lot of transactional data in Oracle. Okay, right? They have their own balance sheet, trial balance, all this thing, everything in the acquired company. In the acquiring company, which is SAP, is running in SAP. It's a built-in system. Everything is running, right? There's no what do you call that? Everything is running fine. That configuration is set up, master data is set up. All the number ranges and batch charts, interface, everything set up. Now, when you bring another company code into SAP, there are a lot of things that you have to take into account. Okay, what kind of how they do the billing, how they send the invoices, how do they do the procurement. The functionality will be the same, right? But there are small things that will pose a challenge when you're converting it from Oracle to SAP or from any other system to SAP. The GL account number would be different. The cost center would be different. The asset numbers, asset master data, they'll be completely different. But when they migrate to SAP, we have to find how you map. Okay. So now here's the thing. Every company, whether they're in Oracle, SAP, whatever, they all have a trial balance, correct? Correct. They all have a trial balance, for example. So as you know, they all have a profit and loss accounts. And balance sheet account. Okay. So this is their trial balance. Let's put some numbers here. So let's say these are the GL accounts. Okay. Okay, and so on. There could be many expense accounts. Then comes your income account, 200560. You know what's called GPS? Anybody know what is GPS? Anybody knows what is GPS? GPS stands for gross proceeds of sales. What is NPS? What is NPS?
No idea.
Okay, NPS stands for net process of sales. GPS, gross profits of sales. NPS stands for net process of sales. Okay. So I'm trying to build a trial balance. Okay. Liability should be credit. So it doesn't matter. Okay, so this is the trial balance. They're going to give it to you. They said, hey, this is my trial balance. Okay, we have to load this into SAP, correct? This is my accounting transaction. Now, these are the account balances, P&L account balance, but that could be history too, right? Right, there could be history of transactions too. Now, depending on when are you migrating that transactional data, whether you want to do it history of transactions or not, whether you want to do it history or not, or you just want to do the open, just you want to do the balances. Okay, any questions? Any something you don't understand so far? Not at all. Why I'm doing this?
No, Vijay.
Okay. So this is a, this is a real time. This happens all the time. Okay, I have done this lot of conversions. When we're acquiring a company, we have to bring in their balances. So just think about this. Until yesterday, this company belonged to something else, right? Somebody is reporting to this. Somebody owns this company. Now I'm buying that company. That company is coming into me. All their profit and loss, all their balance sheet, all the assets should be coming into my books, right? Correct? How do you do this? Okay. Now, typically how this happens is these are the GL accounts these are the GL account numbers in the coming system, the system that is coming from Oracle or some other system, legacy system. They call it legacy. What do they call it? Legacy. Legacy means something that is not used anymore, or that is an old system. Then they start calling legacy system. So this is the trial balance. Typically, an accountant will give it to you. This is my trial balance. This is what we should come into SAP and post into your current GL accounts, whatever GL accounts you have in your existing system. Right? Uzair, do you understand?
Yes.
Okay. Hemant, you have any questions?
No, sir.
Okay. So how do we do this, right? So you have to, this is a conversion process. I keep asking you this again and again, just to so that you will try to think it through. Okay. If you have any questions, please let me know. Even if you don't completely understand this, just ask some question. Otherwise, I would not know how much where you are stuck.
Sure, Ji.
Okay. Now, so this again, I'm telling you again, these are the GL accounts, all the P&L accounts. These are the GPS P&L accounts. These are the balance sheet accounts, liability account. These are the asset accounts. Okay. So we have to post this into SAP. How do we do this? So you can just take the balance, okay, 100240, and post a manual entry debiting this GL account, okay, and then crediting some other account. Then this account will go into SAP, correct? This balances will reflect in SAP, correct?
Yeah.
This account will go into SAP. Now, however, this is the GL account used in Oracle system. We already have an existing system in SAP, existing GL accounts in SAP, manufacturing expenses, okay? So we have to map all these values from 100240. For example, this is a legacy system, legacy trial, okay? In SAP system, so we have a different GL account. So manufacturing expenses, for example, they will go into, okay, this GL account. All the manufacturing expenses will go into the GL account, correct? Sorry, my spelling mistake. Okay, maybe 1 or 2 accounts. Let's put one more account: 3, 4, 5, 6, 8, 0. And then for the GPS account, I probably have 1 account or 3 accounts or 4 accounts, maybe 10 accounts. Okay, let's put again, in Oracle system we have 7 digits. Here also we have 7 digits. I'm going to make it 1 more digit. Then GPS, man, I'm tired of typing so many numbers here. Okay, let's take an example. Let's just stick to this. Now this is called mapping. So we have to look at this nature of these expenses. So manufacturing expenses. I'm just putting an example, right? This could be cost of goods over, cost of goods sold, fixed overheads, fixed variable expenses, other distribution expenses, variable distribution expenses, fixed distribution expenses. They call it VDE and FDE. Promotional expenses, PFME, which is product fixed marketing expenses, production related overheads, manufacturing charges, common charges, subcontracted charges. All this go into the different accounts. Now, when it comes to SAP, they said, hey, we don't want to bring in everything. We want to post into one GL account or 1 or 2. Okay. Similarly, for assets and liability, the same thing. So this is called conversion. So we have to find the matching nature of the transactions, how they define this in the existing company code. What is the purpose of this? We have to bring this and post into the relevant GL accounts in your receiving system. So far clear?
Yes.
Yes, Vijay.
Right. Great. So that is what we're going to do here. So this is a very important exercise. Okay. When you're working in a project, you will always see the conversions. Okay. At least you will now what is called conversions. Why are you converting this? Okay. The goal is, end of the day, the financial controller of this Oracle system or this company code, he wants to make sure you bring in the right numbers into the existing system so that he'll be happy. Okay. Now there are 2 things. One is historical balances. Sorry. One is balances. These are the things typically you will migrate. Okay. AP open items, AR open items, fixed assets. When I say fixed asset balances, it comprises of acquisition cost, okay, and accumulated depreciation. How many people know this?
Yeah, I'm aware of this.
Yes.
Even I'm aware.
Great. So fixed asset balances would be acquisition cost minus accumulated depreciation. Okay. And then AR GL open items. And GL balance. GL balance excluding, can tell me excluding what? Excluding recon accounts, subledger accounts, because when you bring the ARAP, they will fall into that category, to the bucket. Subledger account balances and GL open items, because GL open items will bring in the all the transactions. So we don't want to bring in, when you do the GL balances only, you don't want to bring in the history. Now here there are two things you can notice here, right? AP open items means it's how many open items will be there? There could be many, right? What is the open item?
The balances, open balances,
No.
to the vendor.
No.
The
Oh, sorry. The
not
detail, right? Detail of the payment received. Sorry, payment to be
no,
made to the invoices and means outstanding invoices and open uh, payments, which is not applied to the invoices.
No. Kamal, you?
bills to be cleared.
Right. So when you say balances, right? Balance is just one chunky balance. How much is the vendor balance? $1 million. That's a balance, right? But when you
Right.
bring in the, listen this, when you bring in the $1 million balance, how are you going to make a payment? Right? Because the payment will be executed from the SAP system, right? The payment program will take care of all the payments to the vendors. For that, you have to bring individual open items, not the balances. There could be 100 invoices for each vendor, 1,000 invoices for each vendor, or 50 invoices, 20 invoices, right? You have to bring in each of the invoices, right? That is called open item, right? What is open item? Open item is individual outstanding bills, payables or receivables. Make sense? So when you make an invoice, when you post an invoice, right, vendor invoice, you have to make a payment. The item remains open, right? If you run FBL1 and transaction code, there's a lot of open items, right? It shows cleared item, it shows open item. Cleared item, we don't want to bring in. Why? Because it's already paid, correct? Okay. Because in the new system, we are going to execute payment for this outstanding payables. So we have to bring in this new, we got to bring individual open item because they have a terms of payment, they have net due date. Each invoices have a different net due date, correct? So those are the things you want to bring in. Okay, so these are all open items. Similarly, fixed asset balances, depending on when you are migrating. Okay, this is a very important part. Migration of fixed asset is very challenging. Okay, it's very challenging. Let's say you are migrating on the 1st of January. Okay, you will take the balances from 31st December last year. Okay. Sorry, I know it's too detailed. Okay, there is no step-by-step guide here. Okay, there's no document for this. There's no learning, teaching. Even you go to any colleges in the world, nobody will teach you this, right? Even if you pay $8,000 and take SAP training, they wouldn't even know this.
Yeah.
Okay. Now, fixed asset balances, depending on when are you migrating. Okay. Let's say you're migrating in the middle of the year. You're migrating in the middle of the year. When you bring in all the fixed asset balances, all the fixed asset master data, when you load into first, let's say 31st March or 1st of May, okay, you will still bring in the balances as of 31st December last year. Okay. But as of May 1st, the things, the balances would have changed. Why? Can somebody tell me?
Because of the depreciation.
Very good. Yes, because the depreciation has been running, the accumulated depreciation is going up, right? For the 4 months or 5 months, whatever time it was existing in the system. Right? Now, when you're still bringing in the data, the balance from 31st December, but you're migrating, let's say May 1st. So you are losing the depreciation, right? You are not bringing the depreciation. What typically they do in that situation is they will still bring in the balances as of 31st December. Okay, they'll upload in the system. Okay, then they will do the depreciation run. They call it catch-up depreciation run. When they do the recalculate depreciation, system will calculate all the depreciation for the first 4 months or 5 months and then post into the existing system. You have to keep the period open. It will post from January to May. Why? Why
Vijay,
they do? Yes.
question. So you mean to say, like, the P&L account balances that I see on the legacy trial balance and the balance sheet account balance. So this is as of 31st December, is it?
That's a good point. These balances could be when are you migrating, right? So the go live, when the go live happens.
So, okay, as on date of the migration.
Correct. No, date of going live. So what is called go live? Good point. Good point. Things making interesting. What is called go live?
Go live is when everything is migrated to SAP and then the accounts is generated in SAP.
Correct. So go live means that's right. When they're migrating this.
Legacy system will be discontinued and SAP will run in full fledged, right?
Yes, you are. Yeah, exactly. So discontinued, maybe not the right word. Um, you know, in the Oracle system, when they are migrating the project, they will say we are going to stop using Oracle system on so and so date, May 31st. Okay, or whatever date.
Later.
Right. A lot of consideration goes into this place. So how they run the business, when are they closing? Maybe they will be closing different books. I mean, different fiscal year, right? Then you have to do the fiscal year conversion. Okay, so fiscal year conversion is hot cake. Even last 3-4 weeks, I've been seeing a lot of recruitments, job posting for fiscal year conversion alone. Why? When the companies buy, okay, for example, retail client have a different fiscal year closing. They don't do by books. They don't do by calendar month. It is so funny that they do every 4 weeks. They have a 4 weeks, every 4 weeks. They close the books every 4 weeks. Okay. Retail clients, they do different way. The reason is when they compare, for example, Target. Okay, Target doesn't close the books every month at 31st or 30th. They have something called 4 weeks calendar. Every 4 weeks they close. Okay, in a month they take exact 4 weeks. Why? Because when you say retail, right? When are their sales volume? When the sales happens for them? When they become very busy? Holidays, right? So they're closing their fiscal year calendar is based on their holidays. Okay, so in US, right? That's why they always say third week of third Saturday, third Wednesday. They like to do that. It's all because the corporation has changed the whole how US operates. So that's easier for them to compare last month to this month. Okay, right? In US, right, nothing happens by back in India. There's a lot of the festivals festivals happen because of the star sign, because of the sun sign, because of when this appears in the world. when the stars show up, all this stuff, right? So the date always changes. Last year, the Ganesh Chaturthi won't be same as this year, right? This is a different date. Diwali will be different, right? Same like Ramzan will be different, right? Every year. So people go to, on holidays, people go and buy a lot of stuff. Now, when they do year-to-year comparison, month-to-month comparison, or year-to-year comparison, last year, for example, Diwali would be in October, this year will be November. So when they compare last year November versus this year November, it will be totally off. How many people agree with this?
Yes, Vijay.
Right? So there are most of the retail clients, what they have is they go on holiday. Based on the holidays, they structure their closing. Okay. So let's say July 4th. Okay. They take that into account. Okay. Last year, I mean, July 4th doesn't change, right? It's always July 4th. There are some holidays depending on, second Labor Day. It's the first, the Thanksgiving. Take a Thanksgiving, they say last Wednesday, Thursday of the week, of the month, right? Last Wednesday, Thursday, Friday. It's a Black Friday, whatever it is, right? So it changes. So in order to take this into account, so they do the book closing by weeks. That's interesting. And a lot of things go into this. It is not as simple as, okay, let's do conversion, right? So how do you convert? Let's say you're buying a retail client. How would you bring it to SAP? Now you have this in SAP system. You have this book closing happens every end of the month. But over there, they do 4 days calendar. So similarly, when we were acquired, Nestle was acquiring Dryers company, ice cream company seasonal business. Okay, it's a seasonal business, right? So they have, for them, it's very important when, what do you call this? The holiday starts, when the summer starts, okay? All this stuff is very important for them. So they do a quarter closing based on the seasonal calendar, the weather calendar. And then for them, the retail clients, what is it, a big event, NFL, right? Sorry. Forgot the name. Football, right? NFL, yeah. The football, what happens in February or whatever it is, it's a big day for them, right? For the pizza companies, for the ice cream companies, the chip companies, that's a big day for them, right? That changes every year. So that's why for them, beginning of the year, they will look at their month-long camp. Beginning of the year, they will see when does the NFL happens. Okay. What do you call that big? I forgot the name now. My mind is not working. Super Bowl. When the Super Bowl happens, they will look at it. Okay. Then they will, based on that, they will structure. So when they compare the financials, they. Hello. Hello.
Hey, Vijay.
Hello. Hello.
I think
Yeah,
I'm
Jay.
not.
Sorry, I thought I got kicked out.
Yeah.
My internet just dropped. Where were we?
At the Super Bowl.
Right. Where is my Excel spreadsheet? Yes. So before the beginning of the year, okay, they will sit and they will roll out their calendar. Okay. They will roll out their calendar and say, when is the Super Bowl, okay, then based on the holidays, everything, they structure their period and close. Every year will be different so that they can compare last year's Super Bowl sales versus this year's Super Bowl sales. How much pizza was sold, how much ice cream was sold, okay, all this stuff. Make sense? So in that point of view, the fiscal year conversion happened. That is very difficult, okay? So when you're bringing from another company to this company, a lot of things you have to take into account. As a financial persons, one thing always you should focus is how are they migrating their financial balances, which is what we are talking today. Okay, so we talked about the open items, and why are we bringing open items? Because we are going to make a payment from here for each of the invoices. Similarly, AR open items, we don't want to bring in any cleared items, right? Because it's already cleared, it's already paid. We received the payment, the invoice was cleared, the customer is cleared, there's nothing outstanding. We don't want to bring the historical transactions. We don't want to bring the history because we don't need to, correct? Right? Then fixed asset balances, I told you why are we bringing fixed asset balances. We bring the fixed asset as of 31st, but if you are migrating 1st of January, we will load the balances and we run the depreciation in the January, end of January. When we are migrating, our go live date is on May 1st, you still bring the data as of 31st and load it into data, load as per the 31st, okay? And then there's something called asset takeover date. There's some technical stuff that you have to do. Then you run the recalculate depreciation. When you do that, system will calculate the depreciation from January to May and post into the respective month, respective cost centers. Okay. And similarly, GL open items. So we talked about AR AP open item. What is GL open item? Your bank clearing accounts. Because the bank clearing, the statement has to come in. Bank statement has to come and clear those items. So we have to bring in the GL open items. Then the whatever bank statement going into Oracle, they will be reconnected. The interface guys will work and they will work on this. Everything has to happen on a particular time. That's called go live date. Everything is set up in SAP. Then boom. Now we are going to post all the transactions in SAP. That is called go live. Go live means before the migration start, they will set a date. When do you want to bring all the transactions at SAP? When do users want to post into SAP? When they want to start to create a purchase order in SAP. So in between, they got to take care of the end user training. They got to take care of a lot of things. Roles, granting them access. Obviously, when you acquire a company, right, they will cut off all the workforce, right? There's a 500 people here. We don't need all the 500 people. Just bring 100 people. They will cut the workforce, right? Then the GL balances. So this is we are good with this. Then they call it GL balances. For example, could be anything. Okay, which is this guys, manufacturing expenses. These are GL balances because we don't want to bring the history. Because if you go to manufacturing expenses, each of these will have 1 million line items. If it's a heavy manufacturing company, it will post, let's say, 1 million line items. We don't want to bring all the 1 million line items. We don't need it, right? What happens if we need it? That's why they keep the legacy system. They call it lights on. They keep the lights on. They'll keep the legacy system for data retention purposes. I actually have another video where I explain all the project-related stuff. What are the terminologies they use? I have a video. Okay, I collected all the terminologies for the last 3-4 months. Everything that I used, I collected. I knew from running the project for several years. I put them together and did a session. And someday I have the recording, and everybody liked it. They call it lights on. Why? Because of the data retention purposes. They still want. So that's why I was telling him, and discontinued is not the right word. Okay. So that is called go live. So on, let's say, on 1st of May, all the transaction will start happening here. Sales order will be created. Purchase order will be created. Material document, all the materials are migrated. Material master data, right? AP items, open items, everything is converted. That's called go live balances. Of course, any configuration we have to do. But mostly, they will not touch the configuration. Because the big company, right, they don't want to bend their rules, okay, when they're acquiring small companies. They said, okay, this is how we've been reporting. This is we've been, doing everything. You come here and work with us. Take the space. Make sense? Any questions? Any other questions on what happens in a migration?
There will be they will provide the means we have to migrate the data in Excel, and then we can put in we can transfer in the SAP, or there is another software or something is available to transfer the data.
See, there are a lot of tools and data available. There's a lot of SAP tools also available. That's one something called LSMW. Okay, Legacy System Migration Workbench. They call it LSMW. Okay, LSMW. There's another video that I can share with you. It has a full real-time data migration. Okay, you can watch the video and do it yourself. How do you migrate a vendor master data? How do you migrate a customer master data and all this stuff from a simple Excel file or text file? Similarly, LSMW is a tool used for migrating any type of data. Okay, in S4HANA, they have more sophisticated system that you can upload directly to the table. I never used it. I tried it, but I still like the LSMW. LSMW stands for Legacy System Migration Workbench. Legacy System Migration Workbench. Okay. So did I answer your question, Emma?
Yeah.
Okay.
Yeah.
So I know we started late. We're just flowing over a little bit. So what I want you to do is, okay, imagine you have your own company code, 333, again, same thing, right? HK33, whatever the company code you worked on, 1000, whatever it is. I want you to map this. I will send it to you. I want you to map this. Okay, tell me if there is a GL account already available in the system. You're going to tell me what GL account this will go into. Okay, potentially. What these GL accounts this will go into. What are the possible GL accounts this will go into? What are the possible GL accounts will go into? All the 6 can go into 1, or the 6 can go into 8, 6 can go into 3, based on how you wanted to convince, how you want to justify. Okay, clear? You want me to say one more time? Say again, repeat it.
Yeah, got it.
I'm good, Vijay.
Sound very good. So this is the exercise. Okay, again, the company code that we'll be working on, I forgot. That's good. HK33, 3000, 1000. We are IT, I think.
It's 333.
Okay, 333. Thank you. HK stands for Hitesh. Kamal.
Mine is 333, Vijay.
I was doing 1000 last time.
3000 is Hemant. This doesn't matter. He can do anything.
Yeah, I was doing 3000.
Okay. And HK33, who's there? Our new friend. And who is missing now? Yamini. 1, 2, 3. We have 5 people on the call. Okay, Yamini. Okay. How many A's? Which company you were working on before?
333.
Also 333. Okay. I think there is another either ACE or VRIT. Okay.
Okay.
You can do whatever you want. You know, maybe you can take. I think there's another company called 2000. Okay.
Okay, sir.
Right. So this is what I want to do. Again, the exercise is this is the conversion exercise. Okay. This is I am the finance director. I have a legacy trial balance. Listen to me. I'm a director of finance. I'm the legacy trial balance. You guys are SAP guys. Okay. You are SAP functional, technical, non-technical, both, or whatever consultants you are. Okay. I'm telling you, this is the trial balance. I want this to be loaded into SAP. Okay. The big company code, acquiring company code, here is this company codes. Each of them. HK33, 3000, 1000, 333, 2000. Okay. I want you guys to map. Go and find a GL account or create them. Okay. Create, you know, and then say, I'm, director of finance. Hey, you know, these are the matching GL accounts. All these accounts will go into. Okay. These are the matching GL accounts. All this will go into. Okay. Right. I did not include, I included just assets. Assets is difficult. It needs more, more, lot of, flavors to it. But for now, let's keep it asset. It could be, sundry creditors, whatever it is, right? It could be receivables also, right? So that's what I wanted you guys to.
Which is the legacy trial balance, Vijay?
This is legacy trial balance. Let me color code this.
Manufacturing expenses 1, 2, 3, 4.
I don't like this color.
How do we know the difference between manufacturing expense 1, manufacturing expense 2?
I just put some, I can do this. Maybe let's do this.
Previous one was better.
So, bank charges, common charges. Hey, these are the terms you will come across. Okay. Subcontractor charges, price variance. What else?
Depreciation.
Just paid the freight.
Thank you. Depreciation, manufacturing expenses. Okay, that's fine. Now, in this GPS, right, your retail sales. So one question, sales returns, right? You know what's the sales and what is sales return? Typically in accounting, sales return will be in minus, right? Actually, all the sales will be credit, right? I purposely remove this credit. We don't need this now. Sales return will be opposite side because it's returning inwards, right?
Mm-hmm. Yeah.
So this will go to the income side or go to the expenses side?
Expense.
This goes to the income side, but it will reduce the income.
Negative balance.
Negative balance.
Correct. They call it sales reductions. Okay, good point. They don't call it they call it sales reduction because it is deducting your sales.
Yeah, it's not expense.
Right. Similarly, here, let's do liability. We can do it, right? Trade payables. Now what's called trade payable, non-trade payables? Anybody?
Yeah.
Loan, term loan, something like that.
Payables, payable, open receipt. Down payment receipt from the customer, from the vendor. Okay, assets. Let's do it again.
Yeah, customer advance receipt.
Yeah. Advance receipt.
Then machinery, plant and machinery, building,
Provision will come into assets or liabilities. I think liabilities.
yeah, provision is liability. Loans and advances will be, the advances will be there. We covered that too. So
What else?
yeah, furniture and fixture you can put.
Okay. Yeah, furniture and fixtures it's a small company, boss. We don't use furniture and fixtures. All right. So this is what yeah, we did this very well. So this is just an example I gave you. So now with all this work, you have to map and tell me these are the GL accounts I'm planning to map to this. Okay, make this spreadsheet. Okay, do some good nice work. Okay, when you do this, the Excel should be very clean, color coded, very clearly presented, no spelling mistakes, no mix of caps and small. Okay. Clear?
Yes, Vijay.
Yes, sir. Yes.
So, like I said, this is a very important exercise. This is the first time I'm, teaching anybody. So hopefully you'll make use of it. Spend more time onto this, think about this, and from accounting side, from technical side, from SAP side. Like I said, SAP you can learn, configuration you can learn. Okay, functional competence is very important. Anybody can go and read a book and Google it and research it and find it out. But when you go and talk to you, when you sit in a project, these are the things you should know. Okay, nobody will ask you what is the number range, how do you set up a number range, right? How do you set up a master data? Nobody will ask you this. Okay. Any questions?
No.
Okay,
No,
I'm going to
sir.
save this and send it to you. And then when can you get this to me? So, Hitesh, you clear?
Yes, sir.
Sounds good. And then Uzair, how about you?
Yes, sir.
Okay, yeah, Malini, sorry, Yamini.
You
No.
met somebody or what today?
Yamini?
Yeah, it's clear.
Okay. There's a, I think there's a Tamil movie, right? Surya movie. There's a character made of Malini, right? So I listen to the song all the time. So Surya, son of something in Telugu.
Oh, Surya son of Krishnan.
Krishna, yeah. In that movie, that the main character name is Malini. Her name is Malini.
Oh.
Okay. Anyways, all right, guys, we are done here. We have no questions. So when can you get back this? When can you get this to me? Okay. How about Friday? I might be traveling. I'm not sure where I will be. This weekend, I'm planning to travel. Go some. When can we expect this? Tomorrow?
Hmm.
No.
We are not Vijay.
You have to be.
Soon.
Right? So whatever I know, you should know. Okay. So let's do send it to me by 28th, okay? By Friday.
Yeah.
Okay, then I will tell you this week I'm still thinking. If I'm still in town, I will do a session from here. Okay.
Yeah.
Okay.
All right, guys. So, who said come on? Okay, thank you so much. Talk to you later.
Okay.
Thank you. Good night.
Good night, everyone. Bye.